Hello everyone. This is the pre-market report video for today, 20th September 2023 in the Indian stock market in terms of Nifty and Bank Nifty. Last Friday, US market closed negative and Monday early morning, there was a weakness in Chinese property sector which made all the Asian market to open negative. In line with that, our Nifty opened gap down of near 40 points and in the next 1.5 hours with little bit of volatility, it almost recovered all the lost points. However, the negativity in HDFC Bank was very severe, which in turn pushed the Nifty down to near the day's low point. So, in this process, after 11 straight sessions of positive close, Sensex snapped that and closed negative. Anyway, at the end of the day, Nifty was down by 59 points and out of that 55 negative points, almost 95% comes from just HDFC Bank alone. I mean, on Monday, HDFC Bank CFO held the conference and in that he mentioned that after the merger, there was a significant asset quality deterioration. Precisely in June 2023, at the time of the merger, the gross NPA of HDFC Bank was 1.2%. That, as per his statement in July 2023, increased to 1.4%. I mean, always banks and their NPA is a very sensitive topic and always market punishes the banking stock which have even a small deterioration in their asset quality. Here, 0.2% increase in just 1 month period was a terrible number. So on Monday, HDFC Bank dropped near 2%. As a consequence, it affects all the private banks. In direct contrast to that, all the PSU bank closed significantly positive. I mean, as a whole sector, it increased over 3%. Regarding reason, on Monday, RBI released the August month economy bulletin. By analyzing that, some analysts conclude that this high interest rate environment improves the net interest income of PSU banks than that of their peers. I mean, that's the main reason behind PSU bank's positivity. So, on the sectoral front, PSU bank index gained 3.4%, power, auto and FMCG indices up by 0.5 to 0.8%, while realty, metal, IT and private bank indices down by around 0.5 to 1% each. Overall, the advanced return ratio was 0.82, thus near 20% number of stocks declined than that advanced. About institutional activities, FII net sold for 1240 crore rupees, while DII net bought for 550 crore rupees. Here, just for info, so far this month alone, FII net sold for almost 11,000 crore rupees. Then, after the Indian market, there was no major macro event or any that could influence the US market. Hence, on Monday night, all three US market major index closed flat to very slight positive. However, last night, Census Bureau released the number of new building permits granted by the government in the August month. The data came as over 1.5 million, which was near 7% higher compared to the previous month. Meaning, it's really strong housing market data, which in turn poses the future increase of inflation risk. Hence, most of the bond yield, it increased and reached the highest value since 2005. For example, 10-year bond yield increased as much as 4.37%. Thus, S&P 500 opened mild negative and it dropped 0.6%. However, in the end, it recovered most of its losses. I mean, Dow Jones closed negative 0.31%, S&P 500 decreased 0.22%, while Nasdaq was down by 0.23%. In case of VIX, it's still around 14. Regarding oil, not much change. At the time of this video, WTI crude oil is trading around $91 per barrel and Brent crude oil closed at around $94.5 per barrel. Then, in case of Indian areas, Infosys closed positive, all other closed negative, especially HDFC Bank which dropped near 0.75%. So, it suggests there is a high possibility that banks might trade further negative in Indian market today. Similarly, GIFT Nifty today morning it closed at 20,100, which means it's kind of indicating again 80 to 100 points gap down or negative opening. So that's what happened on global market. Now let's move to the India stock and sector specific info. First, yesterday, American security brokerage firm Jefferies reduced the HDFC Bank target from 2,100 rupees to 2,030 rupees, which is really not good for HDFC Bank stocks at all. and to some extent we can see the influence in HDFC Bank ADR as well. I mean, if required, please pause and have a look. The yellow curve is the 1 month percentage change of HDFC Bank ADR in US market, and blue curve belongs to HDFC Bank price movement in Indian market, NSE or BSE. So on last week Thursday night in US, it reached the 1 month high value. Then it started to fall from Friday. In response to that, Indian market responded negative on Monday, making it to drop 2%. So after that, here as per ADR, there is a possibility of more correction of 3%. So for now, it's negative, but let's see how Indian market react to it. Then the second, coming to Reliance, again on Tuesday, Indian government reduced the gas price that they purchased from Reliance Industries by 14% from next month, which means the locally produced oil has to be sold 14% less compared to the present month gas price. So it's clearly negative. However, if we compare the GDR price movement to Reliance stock price movement in NSE, shows it expects the flat Reliance operation. Let's see. So as a summary, US market closed mildly negative. However, GIFT Nifty indicating a gap down of 100 points, and the weakness around HDFC Bank and Reliance Industries is not good. Thus, for the moment, it's indicating a negative trade. Let's see. Then about the things to look out. First, early morning before the market opening, China's interest rate decision. Here, the expectation is that they will keep the interest rate unchanged. But for one or the other reason, if they reduce it, then that got the potential to turn the market positive, especially the metal stocks. Then during our market hours, first at 11:30, UK's consumer inflation is due, and at the same time Germany's PPI, wholesale inflation data shall release. And finally in the night, very important, US Fed interest rate decision and Fed FOMC press conference. Again, the expectation is to keep the interest rate same as previous. Coming to technical, on the daily chart, Nifty consolidated within a broad range. Thus, it forms inverted hammer candle pattern. Here, it forms after a significant run-up. Thus, it shows that buyers were losing the control. And also, if you see the last 3 days, Nifty forms bearish tri-star kind of candlestick pattern, which is a bearish reversal pattern, and hence Nifty may have formed a short-term top at 20,222 that may result in a small decline towards 19,940. A move below 19,865 could lead to acceleration in decline for the Nifty. Again, that's the extreme case. For the present moment, expects Nifty to consolidate and move sideways. It has support at 20,100 level and resistance at 20,200. A break on either side of this range is likely to lead to trending moves with potential implications for market direction. Then coming to Bank Nifty, it experienced a profit booking at higher levels and struggled to surpass the 46,300 mark. The immediate support zone is in the range of 45,800 to 45,700. This level is crucial, and a breach below it could trigger further selling pressure in the index. Despite the profit booking, the overall sentiment for the Bank Nifty remains bullish as long as the mentioned support levels are held on a closing basis. This suggests that there is still confidence in the upward trajectory of the index. On the options front, the maximum call option open interest is at 20,200 strike, followed by 20,500 strike. Hence, 20,200 is expected to be an immediate resistance. While the maximum put option open interest was visible at 20,100 strike, followed by 20,000 strike, with meaningful put writing at 19,900. Hence, 20,000 to 19,900 is likely to be the support area. Similarly, for Bank Nifty, 46,200 is the immediate resistance and 46,500 is the strong resistance. Whereas, as per open interest data, 45,500 is the support to look out for. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.